The purpose of today's call is of today's conversation is to talk about sustainability. So you might ask yourself, why should you have me as somebody who does that sort of thing? So I thought I would start by putting up a picture here, no, here, yeah. Just because it's a nice picture, and I thought it would be interesting to start with. I was always been told that we should start this sort of conversation by cracking a joke, so that it sort of relaxes the atmosphere. So in the train coming here, I took out my iPad and I entered in it jokes about lawyers. I'm sorry, I couldn't find one. I couldn't select one, but I mean, I think the story itself. So why me? I'm a sort of a hybrid model of people who are involved in business. I grew up in this place, looking at flamingos. I grew up in the shadow of the research institute that my father created in the Camargue, which was from the beginning onwards specializing into understanding how nature and human interact. How can humans have a positive impact on what nature does, and vice versa. So from the beginning onwards, not this reflection that nature is something that you do, that you protect because it's beautiful, although of course it is beautiful, but it is something that you protect because we need it. The idea of functioning or continuing to operate without being tied to nature is something which I find quite difficult to understand, and I will speak about a bit more about this later. What strikes me as being important is that when we talk about nature, we should try to break down the silos in which we regularly fall back. You know, I get to places like this and I'm told, oh, you're a conservationist. You know, you want to freeze everything and to just protect nature. Not true. I happen to also have, as a family inheritance, the position of owner of one of the largest corporations in Europe, the largest corporation in pharmaceuticals, 97,000 employees, contributing to the economy of this country and to a lot of other economies very actively. So if I were interested into freezing development, I would probably have to resign from my job, which is, as we just said, Vice President of Roche Pharmaceuticals. I think that particular conundrum, that particular trade-off, that particular perceived sort of incongruity is what makes me more appropriate to discuss this issue with you today. Because we are in a process to try to understand how we can develop humanity in the principle of one single planet. And I think over the years, we have perhaps not really understood the benefit of collaboration. And this is what I will try to sort of talk about today. So I've done this different, as Jean-Philippe very kindly just mentioned, I have associated myself with a couple of different initiatives. And I want to quickly list them so that you can see which way this thing is working. In the middle days, Roche, the family business, started by my great-grandfather, Fritz Hoffmann, 125 years ago. On your left, there are the enterprises which I support with in nature conservation. So WWF, I volunteered as a WWF trainee when I was 16 years old. My father was one of the co-founders. MAVA, which is a foundation where Jean-Philippe very kindly has agreed to sit with us, on the board of which Jean-Philippe sits. And Tour du Val. Tour du Val is this place we've just seen. It's the Camargue. It's the place where wetlands play an important role in regulating human activities, and we will come back to that. I'd like to just draw your attention to the logo of Tour du Val, because in the tail of the bird you see a human face. And that's, you know, this idea, I'm sorry, this idea is that we are not protecting nature against people, we are protecting it with and for people, and that's something I hold very dearly. On the other side, you have the World Economic Forum, where I'm a member of the Board of Governors, where we are trying since quite a long time to promote stakeholder capitalism, and again, I will come back to that later. We've recently launched an initiative with Prince Charles, with His Royal Highness Prince Charles, Sustainable Markets Council. This is where we originate the Great Reset. How are we going to rebuild the economy after the pandemic is over, if we ever succeed in getting rid of it? Below the Global Institute at INSEAD, the Hoffmann Global Institute for Business and Society, That institute is involved into promoting new ideas in business management, and that's a very granular approach. How can we create value in this sort of environment? And we're going to try to promote the idea that managing businesses is not just managing money, it's also managing impact. And again, I will come back to that later. And the three organizations at the bottom are all about measuring impact. Because if I can say that as an introduction, I think that our real problem in business is not that we have no, let me one step further. I think the real problem that humanity is facing is that we have been separating too much the different sectors of activities in which we are active. For me, value creation, so the entrepreneurial activity at its own, is the base of all the things that follow. Governments, regulators, legislation is trying to help us to promote the creation of value on a long-term sustainable basis. Sadly, we have decided about 200 years ago that the only way to measure success was financial. And so we have a very sophisticated account system to measure performance on financial terms, but we do not take into account impact. And impact for me is at least as important, and again, I will try to explain that during the next couple of minutes. The idea that short-term profit maximization is the mantra of businesses is what has put us in the mess in which we are. Whenever faced to a decision, we have always privileged the short-term efficacy rather than the long-term thinking. Anyway, I just wanted to say that as an introduction, and we now go to the next slide, which is, I think, a realization that the planet has had, that it is time to start thinking in a different manner if you want to look at a sustainable value creation model. So you all know about the United Nations. You've heard about the Millennium Development Goals, which were created at the beginning of the 90s. To try to, at the year 2000, come to a certain amount of prosperity for the planet. The prosperity I'm talking about is, of course, something that has helped us to lift a number of people out of poverty. I don't know if you remember the situation 30 years ago in 1995 when the goals were first emitted. China was just about to wake up. There were about 1 billion people on the planet which were in poverty. And when I say poverty, I mean less than $2 a day. And the Millennium Development Goal succeeded in lifting these people out of that poverty and to allow them to enter slowly but surely the middle class. That has been at the cost of the system. The conclusion of this Millennium Goal were that prosperity had decreased in terms of structures, although it had increased in terms of income. Natural resources were overexploited. We had a growth in inequality which can only be, which at the time looked enormous. It's even worse now. But there was a social, human, and environmental cost to that bout of development. So Ban Ki-moon at the time when he negotiated the next series of goals that the United Nations wanted to take into place, started a negotiation with a group of business people which were not included in the first part of in the Millennium Goals, and came up with this Sustainable Development Goal. So here I show you just the graph, because I think it's quite a good one. 17 goals with more than 120 targets, which all will have to be hit by humanity, including business and society, to be able to get to the level of prosperity that we would like to see. Needless to say, the pandemic has shifted these targets a bit further into the distance. The idea of saying that there will be no poverty by 2030 is, of course, now very, very aspirational. So how are we going to achieve these goals, if at all? We're going to achieve these goals by changing the way we do business. Ladies and gentlemen, business is not about making money. Business is about serving society, and I think it's quite important to understand that. Even the police doesn't agree with me, but there has to be a bit of excitement about this notion. The idea that, and I'll give you the example of Roche, the idea that we, the family owners, are not the owners, but the custodian of this company, and that we have to give it the opportunity to serve the community at large, and in our case, the community at large means the patient. strikes me as being much more important as just being able to convert the performance of the company in dividends and shareholder value. So stakeholder is what matters, not shareholders, and I thought it was important to say that. So we need a change of model. How are we going to do that? We're going to do that here. I've just dropped 5 indicators what this change could look like. Today, in our old system, the corporate purpose is whatever is lawful. I don't say whatever is legal, I say whatever is lawful. People come to you, lawyers, and ask you, is what you are intending to do, is the purpose of our company something that is enshrined in law? And of course it is. I mean, that's how we've conducted business over the years. I would suggest that in the future, the advice should not be about what is legally or lawfully possible, but what is actually desirable, responsible, and sustainable. So I've been asked to make a couple of comments adapted to what lawyers should be doing, should give as advice to their customers. You should not just look at it from the point of view of the text that exists, but probably from the texts that are going to exist. And as you know, the European Union is currently very actively legislating into trying to put purpose at the center of what we're trying to do. The first principle of business today is to maximize return. And I would say to you, the first purpose of business is not to make money. The first purpose of business is to serve the community of people it has defined as being the community of stakeholders it works for. So I've put here care for stakeholders. That's really what we should be doing. And again, at Roche, our stakeholders are the patients. We are trying to help the patients rather than making money out of them. And I think that's important. Of course, you need to make money, otherwise you won't be able to continue to do the research. And I'll have a slide to show you that later. But this should not be the guiding principle. Duty of care. Care for shareholders? No. Care for stakeholders. Management system. Management of profit? No. Management's impact and profit, not only profits. And in terms of culture, and that's the most difficult one to really get your head around it, you should not always wish for more. You should find a place where it's enough. Now, I'm not at all sure what enough is. I don't know how much enough is. And that's something we will have to perhaps discover together. I mean, collaboration is certainly part of this new way of thinking. So, once we have understood this principle, once we have framed this in the Sustainable Development Goals, I now want to get a little bit more practical and to talk to you about Roche in particular and how we've done that there. Here, there's another dimension in this which I think is important to underline. Roche is not just the second largest company on the Swiss Stock Exchange, it is also a family company. So I'm the 4th generation, my children are the 5th generation owners, and we are going to continue to, as I said before, define ourselves as custodian of this company going forward. And the fact that we are able to think not about the next quarter, not about the next half year, but about the next generation has played a very big role in this. It has allowed us at an early age to enter in this transgenerational thinking, which is really the beauty of what family businesses can do. If you think long term, you are much more likely to create a robust model which will survive the shock that the system can throw at us. So I've listed on the next slide some of the achievements, which are very sort of granular. Allow me to go through them. The color blocks on the top, innovating for patients, being a trustworthy partner, protecting the environment and supporting communities, delivering growth and providing a great workplace. You see, there is nowhere does it say that raise the EPS or ensure the share price goes up or increase dividend. It is part of the mix, and of course we don't shy away from it, but it cannot be the only reason why we are running this business. If I look at innovation for patients, for instance, 63 million patients have taken our medicine this year. 63 million. We haven't saved them all, but a number of them are getting much better as a result. The World Economic Forum, but the World Health Organization, WHO, publishes once a year a list of essential medicines. There are 90 of those, and 32% are Roche drugs. So since 125 years, we've innovated healthcare, and society has been able to keep some of these things. When the patent runs off, it becomes generic, and that's even better for the rest of society because you can get the drugs at a cheaper rate. And now, the statistics at the bottom on the left, you know, the 21 billion tests conducted with Roche products. Test is, of course, so important and has become so important over the last 9 months. That statistic I expect will change soon. But this is very relevant to the crisis that the COVID, to the pandemic has brought to us, and perhaps we can exchange a little bit at the end of this conversation about this. What's also important is at the bottom of being a trustworthy partner, in the fight for COVID, in the fight against the disease, in the eradication of SARS-2, we will not be able to do it alone. We have to work in partnership. We have to make sure that vaccine manufacturers, test manufacturers, health systems, ministers of health work together. And in that context, being known over the generation as being the partner with whom you can develop the drugs that are going to make a difference. When I say drugs, it's probably too insightful. I mean, broader than that, the therapeutic solutions that are going to be able to deal with the crisis that we currently have is going to be extremely important. And yes, we are partnering with a number of corporations to try to find a solution to that particular disease. The purple block talks about delivering growth. Of course, if we are not successful at continuing to increase the turnover and continuing to increase the investment we make into research, the whole engine of creation goes further. So I just wanted to underline the 20% of sale invested in research and development, which I think is the biggest, in absolute number, the 4th largest R&D budget in the world, and in relative number, the biggest one in the industry. So how did we succeed in convincing our shareholders, our employees, our stakeholders, that these considerations is material? In 2015, in 2005, 15 years ago, we started at board level a committee of sustainability. And we were looking at how can we explain to everybody that doing business sustainably has an impact, not only on the motivation, but also on the long-term future of the organization. And we decided to subscribe to the Dow Jones Sustainability Index, and that gave us the sort of investor sort of view. 5 years later, we became #1 sustainability champion in the business and in the pharmaceutical sector, and we still are, well, this year we were #2 with 90.1, when the first one had 90.2 or something like this. I mean, quite negligible, but anyway, with that. And that suddenly has created a new dynamic within the company. The first year, we were very pleased when we won. The second year, we were ecstatic. The third year, you know, explosion. And then you say, well, okay, 4, 5, 5, 6, 7, it's part of the DNA now. When we take a decision within the business, we do not do it with a view to be #1 in the Dow Jones Index, but we do it because we understand the issue of sustainability and how we can allocate assets and manage risk in a sustainable development type of environment. And that's, you know, that's been a huge benefit to us today, and I will come back to that later. It's much more difficult to find a single issue which allows us to grow as quickly as that. In fact, I'll go there straight away, because you can see these are all the different mechanics in which you can report your financial performance these days. I mean, it's a soup, you know. On top of it, the private banks are all trying to sort of find their own system as well, and I hope we'll be able to discuss that later on. So it's very difficult to actually measure the impact that businesses have on society. So we need to be able to rationalize that. Here, for instance, I've surrounded in dark blue the areas where Roche is being impacted. So in the reporting framework, we report according to 2 frameworks, the Capitals Coalition and the GRI. And the rating agencies have 3 approaches which are different ones. You have the one that requests data from companies, so we get a letter once a day, and you know it's about 150 pages asking us to describe things. Access to medicine, exactly the same thing. You know, how can we make sure that the drugs meet the customer? Then the rating agencies can also collect what they found publicly published and ask, so not only just a questionnaire, but questionnaire plus publicly available material. WBCSD is a classical one of them. And then they can rely on private information. In other words, they try to find information about us which are not published and which are also not replying to the questionnaire. And these are people like Sun Analytic and MSCI. The fact that we are able, despite that, to score rather highly in all these considerations shows, I think, the robustness of what we're trying to achieve. I'm arriving at the end of my 20 minutes, so I will hurry up a little bit. Maybe I'm talking too fast, I'm sorry. Let me, if we continue on that particular subject of investment, here I've plotted the number of investment made in ESG and how ESG can be a force for changing things. In the last 9 months, we've seen an absolute explosion of ESG investments, and today more than $1 trillion is invested in the ESG sector. When I say ESG, we mentioned before in the introduction CSR. I think corporate social responsibility today is a given. Absolutely every company I know behaves in a sort of social responsible. ESG is probably a little bit more delicate to define, and so it's a question of definition. But still, 1 trillion in 18 months, I think that's quite a significant amount of money. In fact, I don't know if you know a company called Alan Patrikoff, Apax Partners. I recently shared the podium with the managing director of the company, and Sir Ronald Cohen, and he said for him quite clearly today in investment cycle, ESG is the new tech. That's where the next profits are going to be made, because businesses, investment houses are more and more concentrating on the capacity of the managers to do the right thing, rather than just at the idea of the business. So tech has run its course, now it's ESG. I rather like the idea, and that's why I repeat it, of course. We will see if it happens. Yeah. Let me just quickly, I wanted to talk about legislation. Yeah? The change in regulation, in particular, at the moment in Europe is quite dramatic. As a consequence of COVID, we now have an opportunity to introduce this sort of thinking in a little bit more of a systemic manner, and not just from business to business. The majority of companies who have suffered over the last 9 months have gone to their local regulator, government, elected constituency to ask them for money. Quite rightly. I mean, you know, how can you run a business if there is no turnover? Parliaments are suddenly in an opportunity where they can support the economy, and where they can support the economy in a very aggressive manner with amounts of money which were just unthinkable a year ago. I think that encourages us to think that there is perhaps at the moment an opportunity to ask for all these bailouts to have green conditionality. How can we construct a more stable future? How can we construct a future which is more diverse by using these conditionalities? And I think that's what we are trying to do at European level. The Marshall Green New Plan, which is full of attempts at using nature in order to construct a more stable business environment. And there's more to say about this. There is a global agreement that we've already signed, and perhaps this is an opportunity to deliver on the Paris goal. They've been accepted by governments. Nothing's happening. And we also, of course, have the SDGs, which I just mentioned, which as well give in each one of these sectors an opportunity for investment. Now, here comes the Swiss exception. We are saying it's important that companies have to demonstrate what the investment they're making and what the impact is of their activities. And now comes an initiative. And that initiative is something which we'll be voting on the 27th of November. It's the one that has been introduced by the Swiss Coalition for Corporate Justice. And it says businesses must be held responsible in court for their activities abroad, just as well as if they're in Switzerland. How can we be against this? I mean, SGE is all about that. It's about measuring impact. It's about ensuring that we are able to measure the negative impact that businesses are having, as well as positive ones. But going from no publication at all to a litigation type of system, where the burden of proof is taken away from the lawyers and put onto the company, I find that, you know, yet again is too much a word, but I find that a very dangerous those of you who know me personally know that I don't really like Americans very much. And here I'm afraid we have a typical example of Anglo-Saxon meddling into the way in other countries should be behaving. This initiative is justified, reaches the right target, but it is not using the right tool. And I would love to see, to have a conversation about this with you, because you are all going to be confronted with this in the near future. And I really do think that we can achieve just as much with the counter-proposal, which will introduce a mandatory impact reporting on the basis of what other OECD countries are doing. And that, for me, is the best way to making sure that our corporations behave properly. Don't worry, they do behave properly. It's just the fact that they can be taken to court about it, which is, I think, not only unfair, but also probably unworkable. But again, interesting conversation for later. I think I will probably skip most of these things and invite a conversation about this. I've run over my time. Thank you very much for having listened to me.